Hello and welcome to the 𝗨𝗽𝗱𝗁𝗲𝗄𝗏s monthly multifamily update. This month I'll be sharing my key takeaways from our 2021 end-of-year apartment report. To start, I'd like to focus on a regional trend of rent growth and vacancy decline. Across all 4 counties, we saw over 13% rent growth year over year, with vacancy declining by 2.6%. While this report has a lot of data and I suggest sifting through it, I did want to bring out the top 3 rent growth markets. Kitsap County over 19% year over year. One interesting takeaway is that urban King County had the 3rd highest rent growth on a percentage basis, but 2nd lowest cap rate compression. It could be a good buy for investors at this time. Lastly, we ranked vacancy rate across each submarket, and suburban Pierce was leading clearly at 2.7%, with East King County posting the highest vacancy rate at 6%. Next, I'd like to shift to the regional sale metrics. While the number of sales is up a few percent, the really impressive statistic is that we have tripled the volume. While price per unit and price per square foot are about the same as they were this time last year, the impressive stat is that buyers are paying 20% more for the stream of income. Yes, that's from a 5.1 cap on average to a 4.0 cap on average across the region, an all-time record. There's a demonstrated imbalance of supply and demand, and the market is favoring sellers at this time. Looking to sales price velocity, we wanted to compare the top 3 markets for cap rate compression where demand has exceeded the rest of that in the region. Urban Tacoma outpaces every submarket at 160 base point compression in cap rate. The buyers have spoken, and Pierce is the hottest market to buy in right now. The 3 big takeaways are that the number of sales are down 30%, yet sales volume is on pace to beat the 5-year average, excluding 2019. And lastly, cap rates are down across every single market within the region, showing buyer demand for the Pacific Northwest. And lastly, I'd like to leave you with 3 bold predictions as we look forward. Number 1, we think rent growth in the urban markets will outpace the suburban markets over the next 3 years. Second, we think the tightening of cap rates between urban and suburban properties is here to stay. Historically, there could be up to a 200 basis point spread between an urban property cap rate and a suburban one, but buyers are aggressively pursuing both. Lastly, we think urban King County price per unit and price per foot will outpace the rest of the region in growth over the next few years because those 2 metrics have lagged since the beginning of COVID.